Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. This guest has been with us before, but not for a long time. We're glad to have Jay Taylor back. He's the editor of Jay Taylor's Gold, Energy, and Tech Stocks newsletter. He's the host of a radio show, Turning Hard Times into Good Times. Thank you, Jay, for joining us here again on Reluctant Preppers.
Well, it's good to be with you.
We met in person for the first time at the Mastermind Symposium in Dallas, Texas, and we've been in touch since then. You've had you on the show a couple of times. And today, folks, is Thursday, January 31st, 2019. Jay's with us to talk about a look ahead into 2019. Jay, we've had several guests on the show, from Rob Kirby, who in the fourth quarter of last year said, "I've never been as bearish as I am right now," talking about the equity markets in general and the plight and the stability or lack thereof of our financial edifice. We've also had Gregor Manarino on multiple times last year in way up to fourth quarter, talking about the fake markets that are being basically held up and suspended and propped up well beyond their natural life. And when you're on the surface of a bubble, it can be very difficult to know when something quite cataclysmic could happen. But on the other hand, if you look at 2018 versus previous years, it's been a choppy and volatile road for equities compared to the monotonic increases that have been happening in previous years. So you just recently gave a talk at a conference in Vancouver about what market forces lie ahead in 2019 and what would be a safe haven market depending how things play out. Can you tell us more about your overall premise there? What was your main thrust of that talk? And start walking us into that, and we'll have more questions along the way.
Sure. Well, normally when people start to become uncertain about the equity markets, they sell their stocks and they buy US Treasuries. And as long as people are confident in the system as a whole, that's what happens. And so the safe haven is to go into U.S. Treasuries. U.S. government can always repay its debt, supposedly, because it can always print money to repay it. And so people think of Treasuries as being the ultimate safe haven. I don't believe that's true, because I think ultimately governments fail and they're not able to pay their debts. But leaving that aside for the moment, the question is, are people going to remain confident in the U.S. government, in the Treasuries, in the government's ability to repay its debt, or might it have some questions about that? And if Rob Kirby was suggesting that he thinks this is a very, very shaky time, I would agree 100% with him for a number of reasons. And I might point out that there have been quite a few times in the past when investors have gotten very frightened about the system as a whole. And the system has held together much longer than I thought it could. Of course, 2008, 2009 being the last time when it was challenged significantly. In fact, I think you can make the case that the wheels almost entirely came off the wagon. We could have seen a complete failure of the system in 2008, 2009. And of course, nothing was fixed. The problems were only exacerbated, so that 10 years later, Rob Kirby, I think, is absolutely right to think that we're on extremely shaky grounds now. And the next time, the question is, can the system be salvaged the next time? And I think the answer is probably not. Now we're 10 years into this equity bull market. It was challenged last year, the second half of the year. And by the way, last year was one of those years in which money came out of both, at least during the second half of the year for sure, money came out of both stocks and bonds and started and treasuries and started moving a bit into gold. We started to see a recovery in gold. So as an investor, as a person who believes that gold is real money and that is honest money, and that when we went off the gold standard, America and all the countries of the world started engaging in fraudulent fiat money that is essentially a lie. That ultimately the system will demand a return to gold or to honest money, and that's the premise. Of course, that's why I published my newsletter. I focus primarily on mining companies and gold companies that discover gold in the ground. That's a riskier business than buying gold and holding it as a store of value, as pure wealth. And that's what I think people should do to start with. They should build their portfolios with a base on that basis of gold and silver, and own that. But for more speculative investors, we look at companies that can find that wealth in the ground, and that's primarily what I do. But I'm really interested this year then. The big question is, was 2018 the start of a major decline in equities and a move into treasuries? I think that's for sure. Then the question is, will the system hold together, and how long will it hold together before they have to look for another safe haven, when people lose confidence in treasuries and in the system as a whole?
You mentioned the people having a portfolio base of holding physical gold and silver. Do you have any, and just to reassure everybody here, we do not give direct individual personalized financial advice on this channel, but do you have a rule of thumb that you either follow yourself or that you think it has a lot of credence as far as how people should face that in terms of percentage of their overall net worth, that sort of thing?
I think it depends on the individual, really. And my idea is that if I have savings, especially now because I agree with Rob Kirby and others that the dollar is becoming increasingly vulnerable. If you have savings, I think you want to put them into gold and hold it physically. There are some ways you can use your gold to try to gain some interest or some earnings, but that's risky too. That brings with it certain risks.
You're thinking of cash flowing it by selling covered calls, that sort of thing?
Well, you could do that, but also there's Monetary Metals is a group that I've just come in contact with that are doing that. I think it's a relatively safe way. You lease your gold and can get 2 to 4%, something like that, and it's paid back in gold, and you never really give up ownership, but it's held in trust for a 1-year period. So there are some things like that, but I think that the best thing to do is just when you have savings and you're not going to use them for some purpose or another, then put them in gold. I know Gold Money is an organization I've done some work with, have put some of my personal money in there. And they had a system before where you could buy gold and then use it against, and have a debit card. So you could, I'd put a little bit of loose change, a couple $100 or whatever that I didn't need that month, and just go out and buy a couple $100 worth of gold, put it in the account, and then if and when I ever needed it, I could sell the gold, load up my debit card, and go spend it in fiat. So that's, and they really looked at gold versus all numbers of currencies over a long period of time. And the best thing to do long term in terms of its holding your purchasing power was to trade your currency for gold. And that was true of the United States as well as, and other countries even more so, because the dollar has been relatively strong compared to most other currencies for quite a while. So I just think rather than say what percentage, I just think when people have savings, don't keep it in fiat, put it in gold.
It's interesting, that last comment you had made prior was about it would historically be better off putting your savings in gold rather than in fiat. It's just startling for the first time anybody sees the true value of the purchasing power of the U.S. dollar curve plotted from when the foundation of the Federal Reserve in 1913 to the present day. And it's arguable, depending on what measure you use, for cost of living adjustments and blah, blah. But people say now it has somewhere between 2%, 3%, 4% of its original value that the U.S. dollar has. And so people who are critical of, gold hasn't gone anywhere, or gold's only gone down the last decade or something, it's like, compare that to the long picture of dollars.
The big argument usually is gold doesn't pay any interest. Well, okay. But even if you, and of course, neither does fiat these days. So, but, and of course, Paul Volcker squashed the gold market, the gold bugs, back in 1980, 81. I remember very well because my first mortgage was a 17.5% mortgage when I bought a house in Queens, New York. And but they can't do that now, Donegan. They can't, I think they can't raise interest rates now. And I could go into some of the reasons for that.
Please, yeah, feel free. And I know exactly what you're talking about because we've had Gregory Mannarino on and others who have talked about that the corner that the Fed has painted themselves into, not just the Fed, but all central banks. Go ahead.
Yeah, well, we're the U.S. government is now approaching, I think, $22 trillion in total debt. And it's, of course, every time there's a major crisis, they pump more money in. And that, of course, is not money as in gold or silver. It's a liability-based money. So every dollar that's created has a liability behind it. And so what we're seeing over a long period of time, and it's accelerating now, is debt growing much more rapidly than GDP. So the ability of the United States to repay that debt is being reduced dramatically. But just as a very simple illustration, with $22 trillion of total debt, a 1% increase in the interest rate means that the government's going to have to cough up $220 billion a year simply to pay interest. And if we go back to, we go back to 1970, before we went off the gold standard, a 1% increase in the interest rates would have increased the government's interest expense per year of $3.7 billion compared to $220 billion now. So, and if you look at the curve, at the debt curve, and then look at that compared to GDP, you can see you don't have to be a rocket scientist to figure out that this can't last forever. And there's some very good reasons for that. I know, Donegan, you're an advocate of Austrian economics, but if we look at a chart that shows debt growth, total debt growth, you look at the what might be considered productive debt growth. That would be the amount of debt that the economy could have taken without, that would have been productive debt that would have allowed the economy to grow. And it's just a very small percentage of what has actually been created. So we have unproductive debt and a counterproductive debt that is just growing dramatically. So now it's at the point where the debt is growing so fast that it's starting to eat into the flesh of the organism, of the economic organism. And it is, it's of course the middle class getting squeezed dramatically, and we're seeing socialism on the rise and people demanding that government provide things for them that the government has no ability to provide for. But if we look out, it was an interesting quote from Paul Volcker's mother, apparently, or from Paul Volcker, who asked his mother one time, why can't we have yachts like those other people? And she said, because we don't have mortgages. And the idea is that debt, it really pulls consumption forward. So America has lived beyond its means for so many years, and for the longest time, foreigners have been willing to buy treasuries and fund our extravagances and our means to live beyond what we are earning. And Donegan, I think that may be coming to an end. I think, we're seeing increasing signs, geopolitical tensions that are rising, Russia and China on the one hand, and Iran and some of those countries that are really not interested in seeing the United States go in and overthrow their governments and losing their sovereignty. And China especially is showing signs of backing away from the treasuries. There's a whole host of reasons Japan isn't funding our treasuries as they once did because they have their own needs. The world is simply living beyond its means. And so I think we have a day of reckoning. And I really believe that the dollar is likely to come under some extreme pressure here in the near term. And I think because of some of those, I really believe that our Fed chairman really has been trying to put the dollar back on a more solid footing. But I think, obviously the equity markets started getting really shaky towards the end, the second half of last year. A lot of fear started to creep into the markets, and the pressure was put on them by the president as well as, I think, Wall Street. to loosen up and
Hmm.
stop tightening the monetary strings. And so it looks to me like he may have capitulated. And if you can't really blame the guy, because if you look back, if you go back to 2008, I mean, you remember what a horrific, fearful time that was,
Hmm.
and what Fed chairman would want to be blamed for the next one that is likely to wreck the entire system. So, I think that he took on anybody that takes on that job has, given the position that the U.S. is in now, is in an impossible position. Do you agree with that?
I certainly would. It's as Gregor Manarino or Rob Kirby have pointed out, we're past that point of no return where you can't just rebalance the system. You can't quote unquote return the Fed's balance sheet to normalized conditions and interest rates to normalized conditions, because the effect on the markets would be just devastating. We keep hearing lip service saying that, oh, the economy is so strong, and yet it can't tolerate even a quarter of a percentage point further
Mm-hmm.
increase in lending rate, and it can't tolerate the unwinding of those toxic mortgage-backed securities and everything else that
Right.
the Fed sopped up in 2008, 2009. Can you talk a little bit about the equity markets? You mentioned them looking shaky at the second half of last year, but we're still seeing this amazing, what would you call it? Resilience, if you can even call it that,
Yeah.
but basically this
Hmm.
sustaining hand supporting what seems like it's a struggling victim. Can you talk about what you're seeing specifically, or what your guests have talked about the stock markets?
Yeah. Well, I think that clearly the what I call a capitulation by the Fed chairman here is because of the equity market. I think they're scared to death of an equity market spiraling out of control to the downside. It will take the system down. And I kind of look at the U.S. economy as being sort of perched on a knife's edge, if you will. A little too tight, and we go down onto the deflationary side, and we have an unraveling like we had in 2008, or probably a lot worse. I mean, China's in no position this time to bail the world out as it kind of did the last time. What central banks are in a position to do at this time? And so I think that the fear is that if they're a little bit too tight, it could send us down that side of the mountain. Or if, on the other hand, if they're loosening up, we could start to go off into a hyperinflationary environment. And that's where I think that's where we could head now, because of the fear of tightening, and but at some point in time, this will feed on itself, because people will start to lose confidence in the Treasury and the Treasury's ability to repay. I mean, if you just start looking at the finances. I mean, there was another chart that I showed in my presentation in Vancouver, in which, I think it's by 2030, and this is the Office of Management and Budget, is projecting that by 2031, our interest expense will eat up all of the tax revenues, and they're not making any. I mean, they're making I think, very liberal assessments, assumptions that there won't be any recessions between now and 2030. And I think they're also being very modest in terms of, and pretty aggressive in terms of GDP. I don't have exactly the assumptions that were built into this, but the Office of Management and Budget, which is what people quote,
Mm-hmm.
and I mean, they are saying that by 2031, there won't be any money for anything other than interest. And so that's a pretty dire. So the world doesn't have to be. I mean, you don't have to be a rocket scientist to start understanding and start to see that Uncle Sam's in trouble, that he's insolvent or soon will be, and so the liquidity they have to keep pumping the liquidity in there, and they have to try to keep the equity markets going up. And I think, we have to realize that it's not the middle class anymore that owns much of the equity market.
Mm-hmm.
It's a few of the people at the top. It's the elites. And that's where they have their wealth, and they don't have it in gold. I think they're going to start to think in terms of gold. I think they have been starting to think in terms of gold. But for the most part, the people that are in charge of our government. So, Ron Paul has always made the point that he's always been an inflationist and thought this would end in a hyperinflation.
Mm-hmm.
which I think is the worst of all worlds. So I think that, the German hyperinflation stocks did relatively well compared to cash. I mean, if you're buying stocks, you're buying a piece of something that might have something real in it, depending on the nature of it. And I would think that if hyperinflation starts to become perceived, or rising levels of inflation, that people would start to buy equities that have assets behind them to an extent. I mean, we saw that in 1970 and in the late 70s, when we started having double-digit inflation in America, and people started buying companies with real assets in them. So companies with gold and companies with real estate and companies with things like that. But I on the other hand, Michael Oliver, who's a technical analyst that I have on my radio show almost every week because he is so good, I found him to be so helpful, not for short-term traders, but from a long-term perspective, is absolutely convinced that the S&P is going down. I would be talking to him again next week to see if he might have a reassessment of that given the bounce back, but I don't think so. I think he's convinced that we are heading lower. He also thinks that the Treasuries will be the beneficiaries of that in the near term, but he also sees some leakage already into gold, and we're starting to see a gold market that is looking much stronger than anything we've seen. I think he's convinced that we will be blowing through the 5-year high within the next couple of weeks.
Wow.
Which would take us up close to 1,400.
Mm-hmm. Yeah, we've been stuck in a trading channel for the longest time, and people are talking about when that breakout happens, the length of time you spend in a trading channel usually correlates to the force with which you leave it if you're going to break out of it.
Mm-hmm.
Before we get back to talking about gold, and I want to, but you mentioned something quite provocative. You said China bailed the world out last time, but they can't do it again this time. What did China do back in 2008, 2009 to bail the world out?
Well, they printed huge amounts of money. They bought huge amounts of commodities from various countries around the world. They bought other stuff too. But China is now, at this point in time, from all I can perceive from where I sit, is maybe in trouble, that their economy is slowing down dramatically. They have, the same kind of problems we do, only probably worse in many ways, because they're, pumping huge amounts of money. They got cities with people, nobody living in them. And of course, you got these zombie banks and dead companies that basically scatter the terrain. They can't defy the natural laws of economics just because they're good, strong communists. I mean, maybe there's a growing number of people in our country that seem to think that the laws of economics doesn't apply to that there is no such thing as the natural laws of economics, but obviously our founding fathers believed there were, and that's why they wanted government's hands off of things. But no, I think China's not in a position this time. And Jim Rickards, who's been on my show, has definitely talked in the past about the next bubble. There will be nobody other than the IMF with a balance sheet strong enough to bail out the world. And of course, that leads to a topic that I think is very troublesome for me, and that is the notion of a one world banking system or one world currency or one world government, which I believe is what a lot of the elites are shooting for. But then what does that do for our liberty, which is, I think, the most important thing. Right.
We just returned from a trip to Europe to visit several Eurozone countries, and we talked to several people there about the economic conditions that they are under. It was quite enlightening, and we're going to do a video just about that. But in Germany, which some people have said Germany is the euro because they're the ones who've been holding the whole thing together. There was quite a bit of talk of strain on the parts of the people that we addressed there, people who are in common working job positions, and talked about the decisions being made that they had no ability to influence, and they were just subject to it, and there are a lot of disenchantment on the part of ordinary people about decisions being made by elites that just with no involvement, that old taxation without representation from the patriot days of the U.S. Can you talk to us about what you see as some of the more likely and concerning effects that could happen in the case of an IMF led bailout, the International Monetary Fund, if we see sovereign bankruptcies acknowledged around the world. I mean, you can keep. You could argue, and Jerry Robinson did long ago with Bankruptcy of Our Nation, that you already are bankrupt if you're having to just print money and you don't have any realistic way of paying that ever back. Then what do you call that? Eventually, it's when people aren't willing to buy that debt anymore that you have to acknowledge it finally. But what do you think would be some of the real impacts that people could expect in the case of an IMF centralized currency and bailout?
Well, I think probably a loss of sovereignty, national sovereignty. Of course, that's being challenged now by the elites, and certainly in the United States, we see that battle every day. But I think if whoever lends you the money is in charge, right? So if the United States and all these other countries have to go to the World Bank or to the IMF for money, and they create it out of thin air as well, they might have some SDRs, or probably that's what Rickards is suggesting. We'll go to an SDR kind of a thing that might pretend to have some real value behind it in terms of commodities or gold or whatever. But ultimately, I think what you lose is your national sovereignty, and what you were saying about German citizens being concerned about not having a say in their government. Taxation without representation, I think, would be in spades. And then where would we go? I mean, there would be no place to go. There would be no country in the world where you might go for some liberty and some freedom. So it's just imprisonment, and I think it's the idea of losing our freedom. The very basic foundations upon what America was built on, the idea that we are endowed by our Creator with inalienable rights, that governments don't give us our rights, but we have natural rights that God has given us. And this is something I think that is being lost. And if people don't look to a supreme being, to God, for their answers in their life or for their rights, then who do they look to? Well, they look to the White House, or they look to in that case, the IMF. And I would say that is not a world that I look forward to living in, or that I would want my children and grandchildren to live in.
If we could circle back now to your focus on what could happen for gold, you mentioned kind of a multi-step thing, and that is evidence of concern about the strength or frailty of the equity markets. One evidence of that being President Trump's behind doors meeting with 6 major Wall Street banks, followed by claiming that people should consider buying on dips on the stock market, and the stock market showing a rather remarkable rally over the past month here, and the Fed basically flipping their position from saying that they need to continue to tighten because of the strength in the economy and no change to what they call it, putting on autopilot the normalization of their balance sheet, that sort of thing, to now saying just almost the opposite, is like no cuts, no interest rate hikes in sight, and basically pausing any changes to their balance sheet. So I guess those could both be considered evidence of, like, don't listen to their words, watch their actions, things that the people in the highest positions of decision making are saying that they're not comfortable with the strength of the market. So if that's the case, then stage one could be the smart money leaving the markets first, and you say the first stop might be going into US Treasuries, but we've already seen China and Russia and other companies dumping US Treasuries in 2018. So who's going to be buying the Treasuries?
Yeah, that's the question. And, and especially if inflation rates start to rise, then you're going to start to see the markets demanding higher rates in order to buy the Treasuries. And then that would mean that the U.S. budget deficit would be in bigger trouble. As I pointed out, a 1% raise, what it does, $220 billion a year. And I mean, it could get out of control very quickly. And people, you don't need an advanced degree to understand that this is not going to last. So it seems to me that we may have come down on that side of with the Fed's capitulation here. It seems we may have come down on the inflationary side of it. I put something together in my newsletter that I watch every week called my Inflation Deflation Watch, which is really an attempt to try to perceive which way things are going. It's a mixture of commodities, equities around the world and different kinds of equities, and it has treasuries in there as well. And I think that we could be heading now into something that gets away from us on the upside. America, unlike Germany, remembers still, some people there at least, and the history books will record the time of hyperinflation that destabilized the country and led to Adolf Hitler. And in our country, the memory is more on the deflation side, on the fear of going down the other side of the mountain into to Great Depression. So I think if anything, we're likely to err on the side of ease. And I just think if I try to put myself in the boots of Chairman Powell, and he would not want to be blamed, because he most certainly will be, if he continued to hold tight, and we would inevitably, I think, go down and have a liquidity crisis like or probably far greater than 2008. So it's easy to understand why he's capitulating. I just think there's no way we can win. There's no way of coming out of this without some real extreme difficulties ahead of us, I'm afraid. I also think that equities may not be if we're going to go the direction of inflation, equities might be better than just holding cash. Because I think what the central bank's likely to do is start printing money to force interest rates even lower.
Yep. But articles today,
hand,
even on Zero Hedge and elsewhere, articles coming out about negative interest rates being the next step.
Well, and that's really fearful, because then what are people holding demand deposits going to do? They're going to try to take their money out of the bank, and that leads to the next fear of making withdrawals illegal, or making you move some of your money into equities, part of the bank's equities or whatever. So bail-ins instead of bailouts is what they have set up for us, I think.
Yeah, we had done an interview about 6 months ago where I actually showed photos of a consumer information card. It's actually this folding fancy card thing that I got in the mail from Capital One, where we have some savings, and they were explaining to help you. How'd they put this? They're equipping your account for your convenience and safety with they didn't say capital controls, but they talked about transfer limits, so that it's gonna come. And they said they'll do it at their discretion and at their date and time of choosing, but they'll limit the amount that can be transferred out of your account. And it's like, holy smoke! So we have a video. We have a video called "Locked Out of Our Accounts," so people can look that up. But what you're saying is absolutely true. That people who think, "Oh, that's all right. I'll just pull my cash out of savings if things get difficult."
And by the way, let me just say that's one of the reasons I think people should be taking their savings out of the banking system and buying gold with it. And the safest place, of course, is some in your own possession. So, I would also point out, though, that what people don't really understand is when they put money in the bank, it's not really their money anymore. They've made a loan to the bank, and the same thing with equities. So people might want to consider their equities as well. Gold stocks, which I own, and my subscribers buy. When you have shares of stock in a brokerage firm, you don't own those. The brokerage, they're in the street name. And the brokers can sell those and can short the market with them and everything. They can borrow them from you. They're really just taking your shares. They can do with them what they want because they have possession. Just like the bank has possession of your dollars, it can lend them out. Brokers can do the same thing. I don't know how many people are aware of that. Jim Sinclair warns about that and has been for years. So that's another issue. I don't really haven't really taken certificates, but one of the options is, because I own a lot of different stocks, it would be so cumbersome. But certainly owning the certificates themselves and having them in your possession might be something that people want to do if they have a lot of money in any one equity.
And now if we could circle back to gold specifically, you mentioned it as the ultimate safe haven in the case of people losing confidence in, for example, US Treasuries. Mm-hmm. How long do you picture in a typical, and this is a cultural phenomenon, it's a belief and confidence, so it's very difficult to talk about, but what kind of timeline do you imagine would play out if there was a significant drop in the stock markets and then people rolling into Treasuries? Do you think, you said in parallel you think that some of the money will go at the same time into gold, but how long do you think it would typically be before confidence would subsequently be lost in US Treasuries and there would be a more concerted flight into gold?
That's impossible to say how long it would take, but I think that what you're already starting to see is some smart money, some mainstream money moving into gold, not just into treasuries. And because the propaganda is so strong here, it's so well done. I mean, Edward Bernays has had a remarkable footprint on the Americas' ability to get people to groupthink, and so I don't know. I mean, I think it could happen awfully quick because people have been kept really down on the mushroom farm for a long time. I mean, they're really being made stupid by the elite because it's self-serving for the elite. The last thing they want is people to go take their money out of the system and protect themselves. Mm-hmm. They want people to be bankrupt so that the government can control them. I mean, I don't know that that's something that's conscious necessarily, but that's the way the system works. A totalitarian system doesn't want strong families and strong individuals that can fend for themselves. They want people to be maimed and hurt and injured, so they have to depend on the government. And that certainly seems to be the direction we're heading. So I don't know. It could go very, very fast when the masses finally discover that they've been lied to.
We've certainly seen what you just described as a rampant increase in the number of households that are dependent upon government subsistence. It's been estimated that over 50% of U.S. households receive some form of government assistance now, and we've certainly heard the hue and cry go up during the recent government partial shutdown that the reason we had to quit it was not because that there was something fundamentally at a difficulty of some function that wasn't being provided by government being primarily or something, but it wasn't. It was about the financial dependence of masses of people upon the on the federal government.
Exactly. Yeah. So people don't have more than a week's cash on hand. A lot of people, most people, large numbers of people.
Something you said at the very end there really piqued my interest, and I think those of our viewers who are trying to establish preparedness for their families and store up some food and some supplies and some goods and energy, whatever they need to be able, precious metals, perhaps weapons, to be able to be self-sufficient, to be self-reliant, to be able to stand on their own 2 feet in the case of whether it's a natural disaster or an economic disaster or a government-induced disaster. But do you believe that in that, you said the government and totalitarians don't like that kind of independence on the part of the family. Do you believe that there will be policies brought into an action in that case that would basically make it illegal to publicly call people hoarders or say that you can't do stockpiling of goods, that sort of thing? Any direct policies that will come against people who've made preparations?
Oh, I don't have any doubt about that. I mean, I'm more convinced of that given the extreme move towards the left from the Democrats now. It seems like they're I mean, the idea that you have personal property or that you have personal rights, the idea, I mean, I don't mean to make this political, but certainly the idea that life in the womb is no longer of any value to many people in this country. Even out of the womb, the laws that were just passed in New York would allow doctors to kill babies after they're born.
Right.
So, I mean, the fact that you have that kind of mentality from the left wing of the United States, the political spectrum, if they're going to kill people, I mean, why would they not pass a law saying you're not allowed to own this or that? I think that is almost something you can count on based on the direction of things these days, unless somehow the good Lord intervenes and changes people's hearts and minds, because I think that's where we're headed. I think really what all this boils down to, Donegan, in my view, is a spiritual war. It's a spiritual warfare. It's an idea of what, do we have a creator who's in charge of the universe and our lives, or do we think that we are God? Do we think that we can control things? And I think increasingly through the universities, we've been taught that. We've been taught there is no God, there is no supreme being. And so it's all about us. It's all about looking to the guy in the White House or the girl, the woman or whatever, and putting our trust in humans. And, if that's what that's not what our founding fathers believed. They stated in the Declaration that they didn't believe that we gain our rights from God, not from Donald Trump or Hillary Clinton.
Right, because rights that are
Barack
granted
Obama.
by the state can also be taken away.
Absolutely, and they will be, and we're seeing them taken, and we've seen them being taken away in my lifetime. I'm 71. I've seen a lot of changes since then, and one of the big ones, of course, was 1971, when Richard Nixon took gold away from the dollar. That really enabled the welfare warfare state to grow so dramatically, and people are getting rich from that. The people, the elitists that control the system are getting rich. They don't want to stop the wars. They don't want to stop the welfare because the people, Washington is getting bigger and bigger. Wall Street keeps getting richer every time the Fed pumps more money into the system. And the middle class is being destroyed.
Mm-hmm.
The miners, the manufacturers, the farmers, the inventors, they are not keeping up with the people that control the monetary system. I mean, that's plain and simple, and that's the government and Wall Street, essentially.
I'm remembering a quote that I heard from a person who was an addict in recovery and was now a public speaker, talking to large audiences around about how we have a battle with our own mind sometimes about trying to. He said sometimes my mind is so critical and so negative of me. I think it thinks it can kill me and go on living on its own, and that's kind of that parasite that makes the mistake of thinking it can kill the host, and it doesn't even need the host. It can go on living on its own. We've seen that kind of attitude from the medical system, from the airline industry, from now the government, and so on, just growing as though it can just squeeze out the middle class entirely.
Mm-hmm.
And then who's going to be paying all those taxes?
Yeah, that's right. And well, I think that's exactly right, and that's why I think you have to be concerned about the direction of things and start to prepare as best you can. That's what you do, I guess, as a prepper, right? And you're to try to protect your family as best you can, and then we leave it in God's hands, because ultimately, I mean, I'm 71, and the perspective that I have is a little different than when I was 21. I realize that there won't be too many more decades for me in this world. Mm-hmm. Is it all over then, or is there something beyond that? Mm-hmm. And I believe there's something beyond that. And that makes all the difference in the world in terms of how you treat your fellow man and how you live your life, I think. It should anyway. Another
thing, I don't know if you have time today or if we need to circle back another time, is you mentioned your beginnings in a Mennonite community in the Middle West, and we live in Ohio and often have visited central Ohio where there's large Amish and Mennonite communities, and it's remarkable. It is just astonishing when you get blinded in your day-to-day life in this technological era of the loss of community, for one, and the loss of self-reliance and self-dependence and know-how and can-do attitude and that sort of thing for another, and the loss of connectedness to our food supply and to all the integral parts of our life. To go into that kind of a community, and suddenly you see these people who are living multi-generationally together, multi-families helping out each other, and using traditional skills and arts that have been passed down from generation to generation. And I turned to my wife last time we went there. I said, every time we come here, the Amish look less and less crazy to me. It just seems more and more impressive what they're able to. So one of the things that you mentioned was realizing the spiritual dimension that's in play. But another one you didn't mention was about the sense of community or relying on each other. Yes, I think they go together, though, because I think that, first of all, it's strong families are biblical, traditional families, a mother and a father, the children, and then from there you build out into your community. And the Amish, I never was, I know of a lot of Amish. I was a Mennonite, was more liberal, but the skills, the community, yes, somebody's barn burns down or something, the whole community comes and builds up the barn. But we saw that, and we see that in my church here in Queens too, to a certain extent, a limited extent, among the members of the congregation that come together to help one another. And that's what, the Amish probably more than any other group that I can think of. Maybe it's true in the Mormon community. I don't know. I'm not that familiar with them. But the idea of coming together and because I think that's one of the things that we need to do and be prepared is to know our neighbors, and to have some things in common with our neighbors, and that's more difficult in Queens where I live here than it might be in more rural areas. But I think it's something that people should think about in preparing for the tough times that come, because the ability to share with one another and to help each other out is going to be key. I think a very important
issue.
Well, Jay, you've helped us through a wide range, a really broad overview of topics, and gotten pretty deep here at the end as well. So I just wanted to thank you for giving us this glimpse across 2019, and people who are watching out for taking care of their family and are watching out for, with an eye to the future of what really matters most, would do well to heed your thoughts about do not hesitate in the face of shaky financial markets and untrustworthy, basically, propaganda from the official government sources on what's really happening, what the real risks are. Go ahead and start taking care of yourself and making preparations now. It'll be very interesting to watch how this plays out, and we'd love to have you back on to give us some checkpoints throughout the year if we could, and
Sure.
As things unfold and see how this is playing out, whether this bubble is able to keep inflated yet longer. But the longer it does, the more those charts, and I found some of those charts from your Vancouver talk, I'll be happy to insert those into this video as well. The more ugly those charts are going to become, the more this gets played out.
Yeah, that's the trouble. It's just kicking the can down the road, as they say, but it just keeps getting into a bigger problem.
Yeah, it's a 55-gallon drum pretty soon.
Yeah, it's sad. But I still believe that the Creator is in charge, and there's answers there to be had. And so, we do the best we can with what we can do as human beings, and living our lives the way we're supposed to, and taking care of people closest to us. And then we leave it in the hands of the Creator, I think, beyond that.
We've been speaking with Jay Taylor, the editor of Jay Taylor's Gold, Energy, and Tech Stocks newsletter, and the host of the radio show Turning Hard Times into Good Times. Jay, thank you for joining us here again on Reluctant Preppers.
You're welcome. Thank you very much for having me.
They say the stock market crashed today.
Yeah, I heard that.
Sounds like people's retirement accounts and savings accounts are going to get bailed into the banks.
Yeah.
Looks like pension plans and Social Security are going to get suspended too.
I know.
Sure, I'm glad we decided to put our money into gold and silver instead.
Me too.
Get your first ounce of silver at spot price and free shipping on any order over $99 at sdbullion.com/RP. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.